Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY Report for Thursday, January 6th, 2022. Before I jump into today's charts, just as usual, want to encourage you to please click like each and every time you watch the Daily SPY Report. It does help out a great deal with our search engine results on YouTube. And click subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to our Wicked Stocks YouTube channel. That includes the Daily SPY Report, the Daily Triple Q Report, the weekly DIA, Dow Jones, the weekly IWM, the Russell 2000. In a couple of weeks, it'll be the weekly Bitcoin. And, we also offer a free weekly stock pick and an assortment of other videos that come out on a pretty irregular basis. But just about every day, there's new stuff. And subscribing will give you notification when those are ready to view. So let's jump into the charts. A nice sell-off, big sell-off, however you want to describe it, a sell-off on Wednesday. And we did then settle, of course, below the mid 470s, both below that channel top that we settled above about a week and a half ago, today at 475.70, and also below the short-term channel bottom that I kind of called the slippage factor, today at 474.55, below which we should, over the next 2 to 3 weeks. Now, with yesterday's volatility, with Wednesday's volatility, we could get down into the 453.80 area inside of 2 weeks, depending. And it does remain an objective below 474.55, and you could add 475.70 to that. That is our ceiling now through next week. Let's actually take a look at the support and resistance, and you can see I am bearish below 474.55. We have minor points all the way down today, the most notable of which is 468.12, and that can contain intraday selling pressures. I do expect it today. We could bottom out there initially in the morning and possibly muster a rally back to 474.55 on an intraday basis, but breaking or opening today below 468.12 should yield 464.45, where we can place a daily low. And if we settle today below 464.45, I think tomorrow we should test 460.78 under that kind of volatility. Now, 460.78 is considered a 3 to 5 day target right now below 474.55, and of course 453.80 is expected over the next 2 to 3 weeks at the most. And so there's that. And I don't know what else to say about that other than, we had the sell signal on Wednesday. That was followed by Tuesday's, triple Q sell signal. If you watch that video as well, you know that the triple Q sort of led this sell-off by its own sell signal. And that was essentially confirmed yesterday in the SPY. I've been mentioning how, we can have short-term signals, buy and sell, that are not related to the two, the triple Q and the SPY. But it's very rare where you're going to have a 2 to 3 week move in either without the other also sort of following suit. Maybe not to the extreme as one or the other, but you do have sort of 2 to 3 weeks of weakness. And I think that is what's setting up right now for both. I don't know about 3 weeks. We could get down to that 453.80 in a hurry, possibly by the end of next week. And the same with the triple Q in terms of its target. It may be sooner than 3 weeks. It could be inside of 2, but we'll just see how this plays out. I do think the emphasis is negative now into later January, and that really doesn't change unless we, number one, get back above 475.58, say. Now, we could conceivably do that today. We may actually push above, close above 475.58, and then tomorrow we'd have to reckon with 479.80, this channel top that actually held the highs in for the last week and a half. Now, of course, I know what you're thinking. In hindsight, I wish I had been saying this is the level that can contain buying into later January, because it may well have panned out that way. This is the level also that we would need to settle above to reverse momentum into later January. So, you can sell the mid 470s, 474.55 to 475.58. They are weighted as a 3-star resistance area, able to contain buying through next week, and below which 453.80 remains a 2 to 3 week downside target. If we close above 475.58, we have another 3-star level at 479.80 that I still have to respect for its ability to contain buying through next week. I will say that after having tested it so much over the last week, that on the next attempt, I'm going to be, a little leery of selling it so aggressively, just FYI. But it is still there. I think as a 3-star resistance area, it's symbolic as an upward turning point on a 1 to 2 week basis. So if we were to close above 479.80, I would anticipate the upper 480s end climbing within 1 to 2 weeks. And that is the 489.92 rising channel top that is also consistent with that long-term trend line on the daily chart right now at 488.14. So, I don't expect to see this today. I don't expect to see this between now and the end of next week because the emphasis is heavy now below the mid 470s. But if the market does reverse and close above 479.80, it should sustain a 1 to 2 week rally into the upper 480s that'll soon be into the low 490s, where the S&P 500 Spider ETF, the SPY, can top out into possibly through February trade, and if settled above, would be a significant show of strength as we continue into Q2. But we're not there right now. Just to reemphasize, we are heavy into later January below 474.55 for the next couple of weeks, and that is later January now. It's already January 6th, so the next couple of weeks will be in the January 20s, and I think over that time horizon, we should fall into that 453.80 area. And in fact, by the end of next week or sooner, 460.78 is likely. And inversely, once again, closing above 479.80, while certainly not expected today or between now and the end of next week. If so, the upper 480s become a 1 to 2 week target, climbing gradually. And I think that that's all that needs to be said for today's Daily SPY Report. I'll be back tomorrow for Friday's Daily SPY Report. You have a great day, and we'll talk soon.